To build anything that truly lasts, it takes time.
Market guest Steve Glender, who's from Standard Chartered Bank Global Head. He's joining us now to weigh in on the global markets and how the markets have panned out and the news flow that is shaping the markets world over. Hi, thank you so much. Good morning to you, Steve, and thank you so much for joining us.
Good morning. It's a pleasure.
Steve, first up, the biggest news for morning today is the news coming in on, of course, tariff. There's finally some news that's come out with Japan. They have struck a deal. It's the way the market is reacting, especially the Nikkei has jumped up. It seems like investors had gotten way too pessimistic, and the fact that the deal has come out, it's a win-win for US because they are getting an investment of $550 billion. They'll get 90% of the profits, and from what we hear, Trump is really expecting planned investments from players like SoftBank, OpenAI, Oracle, and so it's a win-win for US. But what does it mean for Japan and also the other emerging markets for the deals to come?
Well, I think in the short term, it removes some of the risk premium that was weighing on Japanese asset markets. So we've seen the Nikkei take a big jump, and even Japanese bond yields have gone up, in this case, not because of inflation or activity concerns, but kind of dragged up by equities. So I think that the markets seem to be relieved that the worst hasn't hit. It also seems that the auto sector got itself like 15% tariffs, which I think is a bit better than many were expecting. I'd say that some of the other stuff is a little bit soft. I mean, promises to invest, direct investment, sometimes they come to fruition, sometimes they don't. They always take a while. But I think that's going to set a pattern for other major economies to try and bargain down some of the reciprocal tariffs in return for direct investment. And that seems to be acceptable to the US.
All right. Hi, Steve. This is Kanishka also joining in. So that's the first thought on tariffs that are imposed on that are to be imposed on Japan. But any particular segments where you feel the impact is going to be felt more than the others?
Well, in Japan, there's always a focus on autos and steel, and there are some headlines that suggest that steel and aluminum aren't going to get the break that autos are. So we'll have to see if those headlines are true or not. There's also discussion of opening up of Japanese auto and some agricultural markets. We'll have to see how much of that actually occurs as well. But I would say that one implication is that it puts pressure on other countries, Japan's competitors for U.S. markets, to come to similar deals with the U.S. because now that Japan is kind of in the clear, they don't want to run the risk that they get hit with harsher tariffs if no deals arrive.
Right, that's absolutely what we meant to ask, whether it will have implications on other competitors and other markets to strike a deal. Could there be higher tariffs for other countries should they refuse to strike a deal like Japan? But that's a wait and watch since the tariff news keeps flowing in. But Steve, on that note, thank you so much for taking the time out and joining us today and weighing in on how the tariffs are really panning out. But let's move over then and come back home. Let's go to Snehi.